In this video, I will show you how to use the ultimate asset and depreciation dashboard tracker that I sell on Etsy and also on my website. If you're interested in purchasing this item, check out the link in the description. If you purchase this item on my website, it's a little bit cheaper, so check it out, and you also get 10% discount on my website. So I built this template mainly for small business owners so that they could track their asset and be able to automatically amortize and depreciate their asset and then generate professional fixed asset schedule and balance sheet schedule. So this template, it automates the amortization and generating a professional fixed asset and balance sheet schedule for the business owner, so it can save them a lot of time and create a lot of value for the business owner. So let me go ahead and explain on a very high level what depreciation and amortization is, and then also what the straight line depreciation method is, so that we can understand what this spreadsheet is doing when we do an example of it. All right. So what is depreciation and amortization? So depreciation and amortization is simply how we account for the loss of value of an asset over time. So when we refer to depreciation, we typically refer to tangible assets. So tangible assets are assets that have a physical form. It's something that you can touch. So an example of a tangible asset that's depreciable is a van or a MacBook laptop, right? So these are items that you can touch, so they can be depreciated. So amortization is very similar to depreciation. It's just amortization, you're referring to intangible assets. So intangible assets are assets that you cannot touch, like Microsoft subscription or Netflix subscription, right? You cannot touch these subscriptions, but you can use it. It is an asset, so you would amortize it instead of depreciating it. And then land is something that you cannot depreciate, because land is considered to have an indefinite life, so you do not need to depreciate or amortize land. So why do we need to depreciate and amortize asset? There's three reasons for this. The first reason is that it lowers your tax bill, and then depreciation amortization expense is tax deductible. So these expenses they go onto your expense section of your income statement, so it reduces your revenue and thereby reduces your tax bill. Right? And then the second reason is that it shows the value of your business. So if you're going to get a loan or selling your business, people want to see your balance sheet, right? They want to see how much you're worth, how much your assets are worth. And then lastly, it can help you plan for the future. So if you have a MacBook last like 5 years to use for your business, on the 4th year, you can start planning and saying, okay, this MacBook only have 1 more year of useful life. I should be planning and saving money to get a new MacBook the year after for my business, right? So it's very helpful in that sense. So straight line depreciation method is what this template used to calculate depreciation for your assets. And why I chose to use this depreciation method for this template is because I think it's perfect for small businesses. Yes, there are other depreciation methods out there, but I think straight line would work best, mainly because it's very simple, it's consistent, and it's acceptable. It's very accepted widely, and it's used a lot for financial reporting. So what is the straight line method? The straight line method is just basically sounds like its name, what its name says, right? We just basically spread out the cost of an asset evenly, so in a perfectly straight line over the useful life of the asset. So your depreciation expense is the exact same amount every single year, right? So it's consistent. It's very simple to do. So let's do an example. So for example, we bought a company van, and to use for a company, and it cost us $50,000. The useful life is pretty much like how long we think it will last, right? So the useful life for this van is about 7 years. So in a straight line depreciation method, what we do is we just take this 50,000 and we divide it by the 7 years here. So each year we'll get about $7,142.86. So after 7 years, you use up all of your the cost of the van, right? So at this point, as year 7, the end of year 7, the value would be 0. You can still use it after the 7th year if it's still working, right? Nothing stopping you from using that van. But monetary wise, it has lost all of its monetary value because we already depreciated all of that worth through 7 years, because we said we have 7 years of useful life. All right, so that's basically very high level what depreciation, amortization is, and then the straight line depreciation method, which this template uses. All right, so let's go through an example so we can see how it works. All right, so if you purchase this template on Etsy or my website, you get two template. One is in Excel that works with Excel 2021, and one will be for Google Sheet. So you can use this in Excel or Google Sheet. Okay, you just need to enable macros and script in Google Sheet. The macro and the script is what is going to automate the automation schedule for you, and then also be able to generate those reports. All right. So if you purchase this template, you get 7 tabs, and I'm showing you this in a MacBook on a Excel file. Okay, so if you use this in Windows or in Google Sheet, it should work exactly the same way. All right, so first tab you should take a look at when you purchase this item, or should set up first, is the asset category. Here you can set up all the tangible and intangible category that you use for your business. So you can change any of this description to fit your business. So these description here will be part of the drop down menu that go on to the asset ledger. So if you're happy with this, you can leave it as is. If not, you can change the description to anything that fits your business. And here, just for informational purposes, because this asset status is also part of the asset ledger drop down menu, and here you can read through what they mean. All right, so if you're happy with this, then you can move on to the asset ledger. So the asset ledger is where you would record all of your assets. So I have some assets already filled out here. And then so just let me clear it out so then we can go through an example of this real quick. Okay, so this is where where you can log in all your asset, your company asset, and you can log as much as 1,000 asset, and it can handle more than 1,000 asset. Okay, so the land ledger is where you record all your land, and the reason why the land ledger is separated out from the asset ledger is because land, as we mentioned earlier, you cannot depreciate it, so you don't need it doesn't need to be depreciated, so we don't need to put in the asset ledger, because all the item in the asset ledger can be depreciated or amortized depending on if they're tangible or intangible. All right, so I have something filled out here so that I can show you an example, but you purchase this template, everything will be blank. Okay, the amortization schedule, let me just clear this so we see how it works later. All right, so this amortization schedule here, after you completed your asset ledger, you can come here and click on this button, and it will generate the amortization for each of your asset. And then the fixed asset schedule here is where this template's already built out for you, and then you can just come here and you just pick any reporting year, and any data that matches this reporting year will automatically populate. All right, so you have a beautiful template that you can print out as well for your company business to give to your accountants or other stakeholders. And then the fixed asset balance sheet here, same thing. You can print out this balance sheet here, and your job is just, to come here and pick the reporting year, and any data that matches that will automatically populate. Okay, and one thing I want to note is you can see here this says balance sheet partial. The reason why it says partial is because this only shows the fixed asset portion of the balance sheet. As you're aware, the balance sheet has other section, right? Has liability, equity, and then current asset. But this balance sheet just shows the partial or the fixed assets. That's why it says partial here. And you can print this out as well. And it makes total sense, right? Because this template only focusing on fixed assets. So that's why the balance sheet here only shows the partial or the fixed asset section of the balance sheet. And then lastly is the dashboard here. You can come here and just pick the reporting year, and any data that matches that reporting year would populate here, so you have a visual data. So as you can see here, these cards up here, they include all assets except for land. Okay, and then here as well, it just gives you more detailed summary excluding land, and this is the land summary. And then here you can have visual data of the asset acquisition and cost. All right, so now that we go through each tab and what they do, let's go do an example. So all right, so I'm happy with the setup here. I'm not going to make any changes, and then I'll go to the asset ledger and I will log a purchase. So let's say we purchase a company van. Okay, we purchase a company van, so I want to show you how it works. So you can come here and log your assets. So you can come here and pick the category. So this category here comes from this asset category here. So that's why I said make sure you set this up first so that it could be in the correct drop down menu. Okay, so this would be company vehicle, and then the asset purchase price. So let's say we purchase it for 50,000 here. Asset condition, we just say excellent, and asset status, it's active. Market value, let's say it's 45,000. Location, let's say it's main parking lot. Oops, parking lot. Useful life, let's say it has 7 years, and the vendor would be Ford. And then I can't spell today, Ford. And then this here we'll just say the warranty. Okay, and then we're not disposing of it, so we don't need to record anything here. If you have any comments, you can write that here as well. So after you record your asset, and then you can come here and record your land if you have any land as well. So I recorded one land here, so just do an example, and I recorded here because I want to save time. And then so after you've completed your asset ledger and your land ledger, then you come here and click on this button here, and it'll generate the amortization schedule for each of the asset that you listed on the asset ledger. So because I only listed one asset, it will just generate one amortization for that asset. Okay, so I already click on it, and then it should give me a note here that says 1 asset process and 7 amortization entries. So the reason why you have 7 amortization entries because we said the useful life is 7 years, so it needs to be straight line amortized every single year. So as you can see, every year it's taking out $7,142.86, right? And then you can see accumulated depreciation here. The first year is 7,000, second year 14,000, just basically these added up, right? So it's cumulative here. And your net book value is pretty much your asset cost. So 50K minus this amortization, your accumulated amortization or depreciation is your net book value. So it's pretty much your cost minus the value that you lost over time, right? So that's your net book value. All right, so it's pretty neat. You just hit the generate, and then it'll generate the amortization table for you. And it does this for every asset, right? So, you know, usually in the real world, what business owners, they would do is they'll have to do it line by line. But here you just click a button, and then, you know, a few seconds later, you get the amortization all completed and done. So that's pretty neat. And then, so when we come to the fixed asset schedule here, we can see if I pick 2032, let's pick 2030 because that's when we purchased the item, right? So we pick 2030. As you can see the company vehicle, this line here. Let me just highlight it. So you can see here there's no opening balance. The reason why there's no opening balance is because opening balance means the beginning balance, right? So pretty much any balance before 2030, because we didn't have any asset before 2030, there's 0. So in 2030 we bought an item. We bought a company vehicle, right? Because I log in as purchase 1/2030, so that's why here it says you have addition. That's like acquisition, right? You acquired a vehicle for $50,000. You didn't dispose of it, so your closing balance $50,000. Your depreciation for a year is $7,142, which you see on this amortization schedule. Every year the depreciation is $7,142, right? So it has it correctly. And then here you don't see any intangible because we didn't record any intangible, right? And then here for the cost here for the land, as you can see, there's no opening balance because on the land ledger, again, I have a purchase date of 1/1/2030, and then my cost is $560,000. So you can see I acquired the land, $560. There's no disposals, closing balance $560, and then land, as I mentioned, there's no depreciation, so that's why this piece is NA. Okay, so that's pretty much how it works. Pretty neat. And then the fixed asset balance sheet, you just come here and pick the year that you want. So let's go pick 2030. And you can see your land's at cost, right? There's no depreciation. And then the building equipment, whatever that's not land and it's tangible will be part of here. So the only thing I recorded was that $50,000 van. So that's why here. And you have depreciation, right? And then so this is your total for your property, plant, and equipment. And down here is your intangible. And then this is your total fixed asset net, all right? Dashboard, same thing. You come here, you can pick any year you'd like, and then it will give you all of this data, right? It will just populate the information. You have gain or loss, it will show you that as well. So let's do an example with gain or loss. so let's say we sell this item here. Let's say in 2032 we decide to sell it. So let's say we sell it for $20,000 and we're selling it on 2/1/2032. Okay, and this is very important. Once you put the amount sold and the date, you need to come to the status and make sure you have it listed as sold, because this will trigger the gain or loss. Okay, and then let's say we add another item here, so you can see how the intangible work too. And let's say we bought a subscription. Okay, and then here we just say cloud subscription, let's say that, and then we'll have here 15,000. Okay, condition says excellent, and then it's active, and then let's say values also, just make it 11,000. Office, useful life 5 years, and then say Microsoft. Oop, I can't spell. Wow, Microsoft. There you go. Warranty, let's say 2/1/2033. Oh, and one thing I want to mention is here you can see, right, it automatically calculates the end of life date. So whatever date you have purchased plus the year, then it'll calculate the end of life date for you as well. All right, so now that we have one sold, and then we add another one, we need to go to this amortization schedule and click on it. So as you can see, right, I made some changes on the asset ledger, but when you come to this amortization schedule, nothing is happening here because it hasn't been refreshed. So every time you make any changes to the asset ledger, then you can come here and refresh it. Okay, you have to always refresh this after you make updates to the asset ledger. It doesn't update on its own. You have to come here and update yourself. So once you click on it, it should give you, it says 2 assets because we logged 2 assets on the asset ledger, and then there's 9 amortization entry. As you can see here, when it's sold, it's highlighted red, and you can see here this piece here, it automatically calculates the gain or loss. And then this is the intangible that we have for subscription, and you can see 5 years, so that's why there's 5 lines here, so that it could amortize out the balance of the subscription, okay, the asset cost. All right, so as you can see here, it's calculating $15,000 in loss. The reason why is because we sold it for $20,000, and our net book value as of 2032, which is $35,119. So 20,000 minus 35,119, you're gonna get negative 15. So you have a loss of $15,000. So it automatically calculated for you. And I want to bring your attention to this annual depreciation here. As you can see, there is 1 month of depreciation. So we sold it on 2/1, right? But so we still have a month of depreciation. So from January 1st to January 31st of 2032, we had a month of depreciation. So that's why you have a month of depreciation here, right? So 7,142.86 divided by 12 is about 595. All right. So this is the main, or the heart of the system, is that it can generate this depreciation schedule for you. And then so if you go to a fixed asset, now you can see, right, you pick 2030, it's still giving you the same information because in 2030 you bought the asset, right, and you have that year of depreciation, but you haven't sold it. So let's say we go to 2032, okay, it should give us a blank balance here because you can see here we had an opening balance, right, because the opening balance is the balance before this 2032 year, right? So before 2032, we had that company van worth 50,000. So the beginning balance 50,000. We didn't purchase anything else in 2032 that is tangible, right? That's why it's blank. We dispose of it in 2032, $50,000. So you don't have any more vehicle. And then you have an opening balance of accumulated depreciation. Then your depreciation for the year is $595, and then the dispose of all the accumulated depreciation. So your depreciation for that item is now 0. So so this is correct, right? So you have nothing left because you sold it. And as you can see in the intangible, in 2032, we bought 15,000 of subscription, right? We didn't dispose of anything, so our closing balance 15,000. So as you can see here, because their log is 2032, 15,000, right? So it's, and then the amortization for the year is 2,750. So you can see here amortization for the year is 2,750. Let's see, right there. And then the year after is about 3,000 every year. And the reason why is because we log it as of February, right? So that's why this here is not exactly 3,000, or yeah, 207.50, because it's only 11 month of depreciation instead of 12. So these here, the reason why it's 3,000 is because they have all 12 month of depreciation, versus this is only has 11 months. So that's why it's 2,750. So that's why when you come here to the schedule here, which is all nicely filled out and everything here, so you have depreciation for years 2,750, right? No disposal, closing balance same. And then for the land, you know, you didn't sell it or anything, so you still have that opening balance. You didn't buy anything or dispose of anything, so your closing balance here. All right. So that's pretty cool the way it works. And then this is the fixed the balance sheet. It's the same thing here. You can go in, pick 2032. You don't have any tangible asset at this point that's depreciable, right? Because we sold the van, so that's why you have 0 here. But then you have intangible here, and you still have the land because we haven't sold it, right? So that's your total here. All right, lastly, so we can go to the dashboard here and take a look to see what it looks like. So we can select here the year 2032. So once we select 2032, the data should pop up. So as you can see here, we have the beginning balance, the acquisition. So the acquisition was the intangible that we purchased for 15K. This is depreciation, amortization. This is the disposal of the van, the 50K. And then the gain or loss. So we had a 15K loss of the van disposal here. So that's why it's 15K for the tangible asset. And then this section here on the left, the PP&E intangible summary excluding land. So you can see the beginning balance matches this. Acquisitions here. And then 3.3K, same thing here. And this don't match because this one, this disposal here is a disposal, the cost of the disposal, versus this is a net book value. So it looks a little bit different. But this amount here, this total here, should match your fixed asset schedule. So as you can see here, the beginning value here would match the fixed asset. So basically the beginning value would just be this here, minus this guy here. So you can see it's 35,714, which just matches this. And then acquisitions 15K. So we purchase subscription, right? 15K in 2032. And then the depreciation amortization is 3,345. So it should just be this one here plus this. So you can see here is 3,345. And then this is the net book value of the disposal of the van, right? So this is not the cost of the van. This is the net book value. So it's 35,119. As you can see, you go to amortization, right? So this is the net book value as of the year that we sold it, right? So it's net book value, and this is the loss. So you can see it matches there. And then the ending value is just 12,250, all right? And then here's the land. We didn't sell anything. And then, you know, as you fill out more of this data, you can have more visual data. But right now we just have the land, right? And because I only showed you like 2 lines of asset. So that's pretty much how this template would work and how the information would flow. And I hope that if you purchase this template, it could be very useful for you, and it could help you automate a lot of your tasks and your work and create professional reports for you. So, you know, if you have any questions or concern, please don't hesitate to reach out to me. And I thank you so much for taking your time to watch this video. So thank you.